press the bell icon on the YouTube app and never miss another update.
Yes, consider the discussion that we are doing in this episode in continuation of what we had discussed in the earlier one. The earlier episode was with respect to how to really treat the temporary differences. So we know that there are two types of temporary differences. One is taxable, another is deductible. On taxable temporary difference, I'll be recognizing a deferred tax liability, while on deductible temporary differences, I'll be recognizing a deferred tax asset. Now, since you are planning to recognize an asset in your books, there are certain checks and balances which are given in Ind AS 12. And it is those checks and balances, or you may call it as criteria, or you may call it as conditions, that we are discussing in this particular episode. What is the concept of DTA? Concept of DTA is that I will be able to save tax in future. But tell me, when can you save tax in future? Only if you are going to pay tax in future. For example, I have a deductible temporary difference, but in the next year I am expecting a taxation loss. I am expecting that under the head of PGBP there is going to be a loss, and if there is a loss, I will not pay any tax at all. If you will not pay any tax at all, then how are you going to save tax? See, concept of DTA is that it will result into lower taxable income in future, and hence I will save tax. But you can save tax only if there is going to be actual tax that I have to pay. That's the reason Ind AS 12 suggests that, see, DTA ultimately is an asset. Asset means it will give rise to future economic benefits. But if I am not expecting any future economic benefit, then there is no reason why I should be recognizing that as an asset in the first place itself. So this is the reason that there is a 3-step criteria given under Ind AS 12. Yes, you heard me right? 3-step criteria, or you may even consider this as 3-step conditions. You have to follow these criteria in a chronological order. The first one should be considered first, then the second one, and then finally the third one. And on the basis of that, you should be recognizing a deferred tax asset in your books. Now, what are those criteria? We consider the first criteria. I'm putting it over here. Criteria 1. I'm writing in very short, very brief. When can I recognize DTA? The first criteria is if there is sufficient taxable temporary difference. I'm writing it in short. If there is sufficient taxable temporary difference, then to that extent you can recognize a deferred tax asset. Concept is very simple. Taxable temporary difference means I will have to pay more tax in future. And deductible temporary difference means I will save tax in future. So if you are going to pay more tax in future and that extra tax can be saved through a deductible temporary difference, then please go ahead and recognize a DTA, because you are going to enjoy the benefit of the DTA. The way I will put it, I'll just take some figures and it will become very clear. Let us say there is a taxable temporary difference of 1 lakh, and there is also a deductible temporary difference of, let us say, 40,000. Let's assume that the tax rate, for simplicity, let's assume it is 30%. So please understand the two concepts over here. There is one item, let us say some item of depreciation on which there is a taxable temporary difference. While let us say there is some another item, let us say section 43B item on which there is a deductible temporary difference. So taxable temporary difference means I'll have to pay extra tax in future. So I multiply this by 30%. So this will give me 30,000. And if I multiply this by 30%, it is giving me 12,000. So I am planning to recognize a DTA of 12,000. DTA, I will be able to save that much of tax. This is DTL. I'll have to pay extra tax of 30,000. So in the process of paying extra tax of 30,000, I will be able to realize the DTA, because the DTA will bring down my tax liability to that extent. So as long as there is sufficient taxable temporary difference, you can go ahead and recognize a DTA. As I was saying, you will have to pay extra tax on 1 lakh, but in the process of paying extra tax on 1 lakh, I will be able to save tax because of the deductible temporary difference. So I will be able to realize the benefit in future. And because you are able to realize the benefit in future, you are eligible to recognize the DTA. So I will recognize the DTA of 12,000 rupees in my books. Right, let me change the figure slightly and you will understand what will happen. Let us say instead of 1 lakh, let's think in this way now. Instead of 1 lakh, the taxable temporary difference is only 10,000. So when I multiply 10,000 with 30%, it is turning out to be, let us say, 3,000 rupees over here. So what does this mean? It means I have to pay 3,000 rupees extra tax in future. If you are going to pay 3,000 rupees of extra tax in future, how will you save entire 12,000 rupees of tax? I hope you get my point. What I am saying in DTA means I will be able to save that much of tax in future. So I am arguing that I will be able to save 12,000 rupees of tax. But taxable temporary difference is only 10,000. That means I will have to pay only 3,000 rupees of extra tax in future. If I have to pay 3,000 extra tax in future, then how will I save entire 12? What is the maximum that I can save? The maximum that I can save is only 3,000 rupees. So this time what will happen is DTA will be recognized but only for 3,000 rupees. Only to the extent of the availability of taxable temporary difference. So I will be able to recognize DTA of 3,000. As far as DTA of 9,000 is considered, it will remain unrecognized. I cannot recognize this extra 9. I can recognize a DTA of 3,000 rupees. So that is the first step that I will apply. Recognize a DTA to the extent of availability of sufficient taxable temporary difference. Here the taxable temporary difference was more than sufficient. So I was recognizing entire 12,000. I have to pay extra 30, but out of that extra 30, I will save 12. So I can recognize the DTA because my DTA is getting realized. But the moment the taxable temporary difference becomes 10,000, now I can save only extra tax of 3. If you can save extra tax of 3, then how can you say I will save 12,000? You can save only 3,000 rupees. So only to the extent of 3,000, I will recognize the DTA. So that is the first criteria. If the taxable temporary difference is insufficient, right? We are using the word sufficient. If it is insufficient, 10,000 is the illustration. If it is insufficient, recognize DTA to the extent it is possible, and the remaining 9,000 in our example is remaining unrecognized. But now I have a second criteria. As I said, 3-step criteria. Criteria 1 has already been exhausted. Now we will look into the second criteria. What is the second criteria now? Let's go through it. Criteria 2. We say future taxable profit is probable. Let's understand this again with the help of an illustration. See, you will save tax in future not only if there is taxable temporary difference. Taxable temporary difference means I'll have to pay additional tax in future. Forget about additional tax. In any case, you have to pay the normal tax, isn't it? So next year, I'm expecting sufficient amount of taxable income. Then against that taxable income, obviously I can save tax by realizing the deferred tax asset. So that is the second possibility. So let us say my taxable temporary difference is insufficient, which was happening in this particular illustration, isn't it? So I was having taxable temporary difference of only 10,000. So 9,000 rupees of DTA was remaining unrealized. So I recognize DTA of 3,000. I recognize DTA of 3,000, but 9,000 is still unrecognized. But in the next year, I'm expecting taxable income. On that taxable income, I'll have to pay the normal tax. And when I will pay that normal tax, I can save tax for the deductible temporary difference. So to that extent, again, I can recognize a DTA. So let us say in the next year, I'm expecting a taxable income. We are now not talking about additional tax payable. Normal. What is my normal taxable profit? Let us say I'm taking the same figure again. Let us say I'm expecting a taxable income of 1 lakh of rupees. So will you not pay tax of 1 lakh? you will have to pay tax on that 1 lakh rupees. And at that time, when I have to pay the tax on that 1 lakh, I will be able to realize this 9,000 rupees of the DTA. For example, on this regular 1 lakh at 30%, I have to pay 30,000 rupees of tax. So you know what will happen? When I will compute my taxable income for the next year, I will claim the deduction for the deductible temporary difference, and to that extent I will save tax. The moment you say I will save tax, the DTA has got realized, and if the DTA is getting realized, then you should recognize the DTA. So the second criteria is that future taxable profit is probable. They use the word probable. Probable means more than 50% chance. See, this recognition of deferred taxes is happening at the end of the year. So when the year is coming to an end, I am recognizing how much DTL should be recognized, how much DTA should be recognized. And when I am recognizing DTA, I am arguing that in next year what will be. When I say next year, I mean the next assessment year, what shall be my taxable income. So if you are more than 50% confident that there will be sufficient taxable income in future, you can go ahead and recognize the DTA. So that's what we mean by the word probable. You should be more than 50% sure that yes, taxable profit will be there in future. Having said this, if you are having a recent history of taxation losses, then in that situation you can recognize DTA only if you have convincing evidence that there shall be taxable profit in future. Again, I'll repeat it, but be careful. I'm first saying that future taxable profit is probable. But let us say you are having taxation loss. Let's say in the previous year there was a taxation loss, and you are expecting that this taxation loss may even continue. If the taxation loss is expected to continue, then you will not pay any tax. And if you are not going to pay any tax, where is the question of saving tax? So in that situation, I cannot recognize the DTA. So in case, let's say in the last assessment year, you had a taxation loss, but you are of the belief that now in the current assessment year, there will be sufficient taxable income, but Ind AS 12 says that when you have a history of recent tax losses, then you should have convincing evidence that there shall be sufficient taxable income in future. So this time I require convincing evidence. Convincing evidence is not really defined in Ind AS 12, but we can understand convincing evidence as 100% sure. Here you have to be more than 50% sure, while here you have to be 100% sure. Sure about what? That there will be sufficient taxable profit in future. Again, let me put it in a way that we can understand. In case if you have lost your concentration somewhere, please go through this point again. What we are saying is that we can recognize the DTA provided I will be able to save tax in future. So I am expecting taxable income in the next year. On that taxable income, I'll have to pay tax. And in the process of paying that tax, I will save tax because of the deductible temporary difference. And that is the reason we are arguing that we should recognize a DTA over here. So, whether there will be taxable income or not, that's the question that we are asking ourselves. So let us say it is a normal case. Every year you have taxable income. Every year you are having taxable income, then you should be more than 50% sure that next year also there will be a taxable income. So the matter ends over there. But let us say in the past, and let us say when currently also you are having taxation loss. Now we know that taxation losses can be carried forward. And when taxation losses are carried forward, they will be set off against the taxable income of the current year. And it is quite possible that after the set off, you don't have to pay any tax at all. If you do not have to pay any tax at all, where is the question of saving tax? And if I can't save tax, why should I recognize a DTA? Because DTA is all about saving tax. So, two possibilities. You do not have any taxation losses right now. Are you more than 50% sure that there will be a taxable profit? If the answer is yes, go ahead and to that extent recognize the DTA. If there is recent history of taxation losses, then you must have convincing evidence, right? You should be 100% sure that yes, next year there will definitely be taxable income. And because next year there will be taxable income, I will be paying tax on it. And because I'll have to pay tax on it, I will save tax thanks to the deductible temporary difference. So to that extent, again, a DTA can be recognized. Returning back to the original illustration, as you can see, I'm expecting a taxable profit of 1 lakh rupees. So I'm expecting I'll pay tax of 30. Now, against that tax of 30, I will be able to save tax of 9,000, and that is the reason I will now again recognize a DTA. So DTA of 9,000 will be recognized. But again, if I take a variation, taxable profit, you are saying is 1 lakh. But what if the taxable profit that I'm expecting in future is only 10,000, right? That means I'm expecting to pay 3,000 rupees of tax in future. If you are expecting to pay 3,000 rupees of tax in future, how will you save tax of 9,000, right? I can't save tax of 9,000. So what will happen? I will again recognize DTA, but only to the extent of 3,000 rupees. So I have this DTA. I have this DTA of 9,000. I will be able to save tax of 3,000. So I will recognize further DTA of 3,000. But this 6,000 will again remain unrecognized. Right. Now I have to look into the last criteria, 3-step criteria. Criteria number 1, that should be your first step. Criteria number 2, that should be your second step. And what is the final step, the final criteria? So here I am saying future taxable profit. That's your criteria 2. And finally, criteria 3. What's the criteria 3? Do you have tax planning opportunities in future? That is my final criteria. So I'll consider the final criteria in form of tax planning opportunity. Don't get carried away by the word tax planning. Normally we understand tax planning as ways by which we can reduce our tax. That is not the concept over here. When I say tax planning opportunity, I mean an opportunity by which there will be higher taxable income in future. Right? So it's altogether a different concept that we are discussing here. As I was saying, tax planning means how can I save tax? That's what we normally understand. But here we are talking in a very different way. If tax planning will reduce into lower taxable income for you, then you will not be able to recognize the DTA, because DTA is all about saving tax, and you will save tax only if you have to pay tax. So let us say if some portion of deductible temporary difference is still not getting adjusted, then you should now consider the final criteria. Do you have any opportunity by which you can create taxable income in future? For example, there might be some valuable asset, you can sell that particular asset and there would be a high amount of gain that you are going to earn, and that gain will be taxable. So I may have to pay tax on it. So I may have such kind of a tax planning opportunity. Or there are certain deductions which I can defer. So I have certain, let's say there are certain expenses which I don't claim as a deduction for income tax in the current year. I decide to claim those deductions in future. This may also result into higher taxable income in future. So if you are having some tax opportunity, and let us say this tax opportunity is resulting into additional taxable profit, it results into, let's say, additional taxable profit, let's say of 10,000 rupees. I have an opportunity of increasing my taxable income and I exercise that opportunity. And because of that, extra tax of 10,000, extra taxable income of 10,000 is generated. This I will multiply by 30%, so I get 3,000 rupees. So I will have to pay tax of 3,000. But in the process of paying that extra tax of 3,000, now I will realize the benefit of the DTA. DTA of 6,000 is still unrecognized. You know what will happen? I will again recognize the DTA to the extent of 3,000 rupees over here. Because of this tax opportunity, I have to pay extra tax of 3,000. But what I will do is, when I compute my taxable income will increase by 10,000 rupees. Now I realize I'll have to pay 3,000 rupees of extra tax, but because I have a deductible temporary difference, I will claim it over here. And the moment I will claim that deductible temporary difference, I will be able to save tax. The moment you say I'm able to save tax, your DTA has got realized. So what will happen is, I will recognize further DTA of 3,000. So I'm finally left with another 3,000, which is still remaining unrecognized. So after exhausting all the criteria available, if still there is some portion of DTA which is remaining unrealized, then do not recognize the DTA. Returning back to the original illustration now, we were expecting a deductible temporary difference of 40,000, right? Our deductible temporary difference was 40,000. Multiplying that by 30%, I was supposed to recognize a DTA. Now, as per the first criteria, I could recognize 3,000. As per the second criteria, another 3,000. And after the third criteria, another 3,000. So total 9,000 is recognized by me. Balance 3,000 rupees will remain unrecognized. So when the year comes to an end, I will recognize DTA not of 12, I will recognize DTA of 9,000 rupees. What about this unrecognized DTA of 3,000? In the current year, it will be ignored. But yes, at the time of preparing every balance sheet, I'm talking about the future years now, whenever you are preparing your balance sheets, you should review the unrecognized DTA. You should keep on asking yourself whenever you prepare the balance sheet that if I apply these three criteria, is it now possible to recognize further DTA? At the end of any balance sheet date, if you come to a conclusion that yes, now the DTA is realizable, then whatever is the unrecognized amount, that unrecognized amount can be finally be recognized. But as far as the current year is considered, I'll be able to recognize DTA only of 9,000. 3,000 DTA, I will ignore.
Press the bell icon on the YouTube app and never miss another update.